Everyone tells you to bet on appreciation. Buy low, wait 10 years, and hope for a miracle. Let's be honest, that's not investing. That's gambling. In 2026, hope is not a strategy. Immediate cash flow is. We've spent the last 3 years analyzing thousands of data points across the US, from rent-to-price ratios to migration patterns and job growth forecasts. We've helped hundreds of investors pivot from hope-based investing to math-based portfolios that pay them every single month, regardless of what the market does. Today, we're cutting through the noise. I'm revealing 5 undervalued cities where the numbers actually work for 2026. Not just where the market might go up, but where you can secure immediate passive income and diversify your portfolio before the crowds arrive. Let's dive into the data. Most gurus tell you to buy in hot markets. They talk about 10% annual growth. They tell you to wait 10 years and you'll be a millionaire. But here's the cold truth. That's not investing. That's gambling. When you buy for appreciation, you're betting on a future that isn't guaranteed. You're paying a massive premium today for a maybe tomorrow. And what happens in the meantime? You're bleeding cash every single month. You're covering the mortgage out of your own pocket. You're terrified of a single vacancy. One bad tenant, and your wealth strategy becomes a financial liability. This is the equity trap. You might have $1 million in home value, but you can't afford a vacation because your monthly cash flow is zero. In 2026, the game has changed. High interest rates aren't just a temporary bump. They're the new reality. If your property doesn't pay for itself on day one, you aren't building a passive income stream. You're buying a second job that pays you to work for it. Hope is not a financial strategy. You don't need a trendy zip code. You need a check in the mail every single month. Real wealth isn't in the price jump 5 years from now. It's in the cash flow you can reinvest * today. Here is the cold truth about 2026. The era of buying a house and hoping it doubles in value is dead. That's not investing. That's gambling. In a volatile market, you don't want maybe money. You want every single month money. We call this the cash flow first strategy. Instead of chasing the next overpriced hotspot, we're looking for undervalued hubs where the rent-to-price ratio actually makes sense. To find these, I use PropStream to filter for high-yield zip codes and avoid the traps. Let's dive into the 5 cities where your money actually works for you. Number 1, Indianapolis, Indiana. Indy is the cash flow king for a reason. It has a diversified economy and a massive rental pool. You can still find quality B-class properties that cash flow from day one. It's not about the flashy growth, it's about the stability. Number 2, Columbus, Ohio. Columbus is becoming the Silicon heartland. With the massive Intel investment, thousands of high-paying jobs are flooding in. This creates a huge demand for rental housing. The trick here is to buy in the outskirts where the entry price is low, but the rental demand is peaking. Number 3, San Antonio, Texas. Texas is huge, but San Antonio is the sweet spot. Why? The military presence. Military tenants are some of the most reliable renters in the country. They have guaranteed income and take care of properties. It's a hedge against economic downturns. Number 4, Huntsville, Alabama. This is the hidden gem of 2026. Huntsville has one of the highest concentrations of engineers in the US. High-earning tenants plus affordable property prices equals massive margins. If you want a market that the mainstream gurus aren't talking about yet, this is it. Number 5, Kansas City, Missouri. KC is the definition of stability. It's a logistics hub with steady growth and very low vacancy rates. It's the perfect place to park your capital if you're looking for long-term passive income without the stress of a boom and bust cycle. Now, knowing the city is only half the battle. You can't just browse Zillow and hope for the best. That's where the competition is. To actually get these numbers, you need off-market deals. I use Deal Machine to target distressed owners in these specific cities before the property ever hits the public market. That is how you secure the margins that make cash flow possible. Now, knowing these cities is one thing. Finding the actual deal is where most people fail. You can't just browse Zillow. You need data. That's why I use PropStream. It lets me filter for high-equity owners and distressed properties in these specific zip codes. Once I have the list, I move to Deal Machine. I use it to map out the properties and send direct mail to owners before the deal ever hits the market. The result? I stopped praying for 5% appreciation and started locking in $400 a month in net cash flow per door. That is how you build a portfolio that pays you today, not in 10 years. If you want to stop gambling and start calculating, check the links in the description for PropStream and Deal Machine. Grab them now and start hunting.